33 million tokens got burned for Venice for VVV, and that makes the token outperform the rest of the market. The question is, how much longer can this rally last? Let's have a look at the on-chain data, the data most people are not considering, to try to figure out what's going on. Now, this is not the first video on Venice on this channel. I published a video in January of last year. That video did not get a lot of attention. It underperformed the average video on this channel. But this here is the price development over time. VVV moved from below $1 all the way up to more than $17. With that, it of course also outperformed Bitcoin. This is VVV relative to BTC. And the big question is, how much longer can this rally last? What are potential drivers of demand and supply? Hi, my name is Gerhard. I've been in crypto for 8 years. I started this channel 5 years ago, and 3 years ago I hit my first million. I did this through active trading. On average, I outperformed buying and holding Bitcoin by 2% per month. Now, not every month makes money, but what counts in the end is the long term. And in this video, I want to share the data points that I look at to decide whether or not to buy or sell a particular token. In this case, VVV. Now here's the news. There is 33 million of VVV that got removed from circulation. We are at a market cap of almost $800 million. And this is not just hype around artificial intelligence. There's clearly some momentum. For example, the trading volume is going up, the altcoin rank is increasing, and also the social dominance is going up. This comes all from Luna Crush. Interestingly enough though, the on-chain metrics are not that impressive. This here is the base chain. We've got 134,000 holders. And what we see over here, that's the number of wallets with at least 60 tokens on the left, 600 tokens in the middle, and 6,000 tokens on the right. Now, since Venice is currently at $17, this roughly equates $1,000, $10,000 and $100,000. Now those are long-term charts, and we can see that none of the wallet cohorts aggressively bought into Venice. Maybe the whales went up slightly in quantity, but that doesn't necessarily explain a rally like this here. How much upside potential do we have now? This here is a list of AI tokens, and we can argue whether or not Chainlink or Near Protocol are truly AI. Chainlink is mainly known for its DeFi usage as a data oracle. Near Protocol is just another layer 1. BitTensor and Render are clearly AI focused though. Let's say Venice was to make another 4x, then it would already flip BitTensor. That gives us an idea where the air might be getting thin, at what valuation VVV will have a hard time rallying further. So that's not even that much given the chart, right? We would already be at that point over here. My impression is that, again, it's short-term speculation that's pushing up the Venice price, and that's potentially dangerous. As so often with those quick rallies, we tend to see much more trading volume on the Perpetual futures. So here we've got 273 million of trading volume. On the spot market, a bit over a tenth of that volume. The price discovery is clearly happening on the Perpetual futures. It's not on the blockchain. Not much happens on the base blockchain. Have a look at this, right? Aerodrome. That's trading directly on the blockchain. Adding those together, we are maybe at 22, 23 million. That does not compare with the Perpetual futures trading volume. And so here is the data. Our first rally in Venice in February of this year was mainly a short squeeze. So have a look at how negative the funding rate got. That's people that were betting on a falling Venice price before, and then the market makers just bought up the VVV token, pushed up the spot price, and then let a lot of liquidations happen. Those liquidations are of course a direct profit for the market makers, right? Just have a look at this. But the recent rally has much less liquidations on the short side, and the funding rate didn't even turn negative. It's still positive. The vast majority of people currently betting on VVV are betting on rising prices. The trading volume is not yet at the high levels of February either. What's problematic though is that the open interest is very high. Open interest simply measures how many bets are currently made on that asset. When this is very high and there is a positive funding rate, that means many people buy into Venice for the short term. They don't necessarily buy Venice to hold it for the long term, because then we can simply buy the spot market. We can ignore the financing fees. But if you want to get in and out of a token very quickly, and if the transaction fees are more important than the long-term financing fees, then you take the perpetual futures. And that seems to be the main source of demand now. Short-term demand via the bets on the price, not long-term demand via purchases on chain. Now, I was wondering, is there maybe a way to time this? What's historically the best moving average for Venice? I've run a backtest, all the moving averages from the 2-day up to the 200-day. The best historically had been the 102-day simple moving average. That's this line over here. So we want to go short whenever we are below. We want to go long whenever we are above. Of course, we don't have that much data, so that best moving average might shift very quickly. Still, it's a good potential anchor point of when the positive momentum might turn around, right? We got one bounce at the beginning of February of this year, and the current rally might still be intact even after a drop of 60% from here. That's how volatile VVV right now is. By the way, if you're interested to run your own backtest on various assets, you can also add your own asset over here. Then feel free to check out Premium. That's also where you get access to the automated copy trading. Link to that copy trading is down below in the pinned comment. If it's your first time here, feel free to subscribe. I publish here regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time. Cheers.